Today, February 10, 2026, the S30 Dow Jones Industrial Average is navigating a historic milestone as it consolidates its position above the 50,000 mark. Following a record-breaking session yesterday, the index is currently showing a mix of bullish momentum and cautious wait-and-see sentiment as investors prepare for critical economic data later this week. Here is an in-depth trading forecast and analysis for the S30. 1. Market overview. The 50,000 milestone. The S30 recently hit a major psychological and technical landmark, crossing 50,000 for the first time in history. This rally has been fueled by a rebound in technology stocks like Nvidia and Microsoft and a generally resilient US economy. Current price action. The index is trading around 50,140–50,180, showing slight upward movement of approximately 0.04% in early sessions. Sentiment. The overall trend is bullish, but the air is getting thin at these record highs. Traders are watching for signs of exhaustion or blow-off top before a potential healthy correction. 2. Fundamental drivers for today. Several macro factors are shaping the S30's trajectory today. The delayed data watch. The market is currently in a holding pattern awaiting the January employment report and upcoming key inflation data. Because these reports were slightly delayed, their impact is magnified. Bullish scenario. If jobs data shows cooling without a recession, it reinforces the soft landing narrative, pushing the Dow toward 51,000. Bearish scenario. If inflation key comes in hotter than expected, the Federal Reserve may delay further rate cuts, causing a pullback to the 49,000 level. B. Corporate earnings and AI integration. Earnings season continues to provide a floor for the Dow. Blue-chip giants are reporting solid numbers, with a specific focus on how AI productivity gains are impacting traditional industrial and financial sectors. This old economy meets new tech synergy is the primary engine behind the Dow's outperformance. C. Geopolitical and fiscal policy. With the current administration's focus on fiscal stimulus through the One Big Beautiful Bill Act, corporate tax deductions are boosting the bottom line for many Dow 30 components. However, rising Treasury yields 10-year holding near 4.17% act as a persistent headwind, limiting how fast the index can climb. Technical indicators. Moving averages. The S30 is trading well above its 50-day SMA 48,662 and 200-day SMA 46,205. This indicates a strong, healthy uptrend. Risk for 10-day, currently sitting near 60 for 66. While not in the danger zone above 70, it suggests momentum is firm but reaching a point where buyers might pause. Volume. Trading volume has been slightly above average, suggesting that the move above 50,000 is backed by institutional participation rather than just retail speculation. 4. Trading strategy for today. The buy-the-dip approach preferred given a strong uptrend. The most high-probability trades involve looking for minor pullbacks. Entry zone. If the price retroces toward the 49,950,050 area, look for bullish price action wick rejections or green engulfing candles to enter long. Target. 50,500. Stop loss. Below 49,600. The breakout approach. If the S30 breaks and closes on a 1-hour candle above 50,220, momentum traders may look to scalp the move toward 50,500. Caution. Watch out for fakeouts at these all-time highs. Ensure high volume accompanies the break. 5. Potential risks. Yield spikes. If the 10-year Treasury yield jumps toward 4.3%, expect the S30 to sell off as the discount rate for future earnings increases. Profit taking. Many institutional funds rebalance at major milestones. Having hit 50,000, we may see sell the news behavior if the upcoming economic data doesn't exceed high expectations. Currency fluctuations. The US dollar index DXY is currently soft near 97, which usually helps us multinational stocks. A sudden dollar rally could pressure the Dow. Conclusion. The S30 is in a blue sky phase, while the long-term outlook remains incredibly constructive with some analysts even eyeing 70,000 by 2029. Today's forecast is one of cautious optimism. Expect consolidation between 49,900 and 50,200 as the market digests recent. Today, February 10, 2026, the S100 Nasdaq 100 is navigating a critical juncture. After a volatile start to the month, the index is showing signs of a technical rebound, currently trading around the 25,250 level. The market is currently caught between two powerful forces: a renewed buy-the-dip mentality following last week's tech sell-off and lingering anxiety over massive AI infrastructure spending and its impact on corporate margins. Technical outlook: the battle for 25,000. Technically, the S100 is in a weak positive short-term phase but remains trapped within a broad horizontal channel that has defined price action since late 2025. Key price levels to watch. Major resistance 26,200. The psychological ceiling. A break above this activates a FOMO rally toward 27,500. Immediate resistance 25,350. The intraday high from recent sessions. Breaking this confirms the rebound. Pivot point 25,000. The neutrality zone. Trading above this favors bulls. Below it, the bears take over. Critical support 24,850. Aligns with the 100-day EMA. A sustained break below this risks a slide to 24,000. Current chart indicators. Moving averages. The price has recently reclaimed the 100-day EMA, which had been acting as a ceiling. Bullish traders want to see the index close today above this line to confirm the trend reversal. Trend status. The index is coming off a 6-week low hit earlier in February near 24,948, making current price action a crucial retest of the recovery. Fundamental drivers. AI and macro data. The software apocalypse narrative fears that advanced AI automation from companies like Anthropic will disrupt traditional software models, caused a sharp dip last week. However, today's sentiment is shifting. The AI capex debate. Investors are reassessing the massive capital expenditures capex from giants like Alphabet and Microsoft. While the high spending initially spooked the market, a winner-takes-all dynamic is emerging, benefiting hardware and infrastructure plays like Nvidia and Broadcom, which have seen strong gains in the last 24 hours. Earnings aftermath. Recent earnings from Meta and Apple provided a floor for the index, even as Amazon and Alphabet faced pressure due to guidance concerns. Upcoming macro triggers. The market is in a wait-and-see mode for the delayed January employment report and the upcoming key consumer price index data. These will dictate the Fed's path for interest rate cuts in the first half of 2026. Trading strategy for today. For intraday traders, the S100 is presenting a range trading opportunity until a clear breakout occurs. Bullish scenario. Look for a sustained move above 25,350. If the index holds this level during the New York afternoon session, the next target is 25,600. Bearish scenario. If the index fails to hold 25,000, expect a quick retest of the recent lows at 24,850. A breakdown here would signal that the correction isn't over. Sentiment note. Client sentiment is currently skewed slightly long 59%. Suggesting that retail traders are betting on a continuation of the bounce. Risk warning. Trading the S100 involves high volatility, especially surrounding AI-related news and Fed policy shifts. Always use stop losses around the 24,800 level if holding long positions today. 500 S&P 500 is navigating a high-stakes environment characterized by a rebound versus reality tug-of-war. After a massive recovery on Friday and a follow-through gain on Monday, the index is hovering near the psychological $7,000 mark. The primary focus for today's session is the January retail sales report, which is serving as a critical pulse check for the US consumer. With the government shutdown delays finally clearing, investors are bracing for a week of macro whiplash as jobs and inflation data loom. Market sentiment. The fear of missing out. FOMO versus AI fatigue. The current sentiment is cautiously optimistic but fragile. We are seeing a classic sector rotation. While the Mag 7 inches and AI-driven tech Nvidia, Broadcom, Oracle led a sharp 2% recovery to start the week, there is an underlying anxiety regarding capital expenditure. Investors are questioning if the $650 billion projected AI spend by the Big Four Amazon, Google, Meta, Microsoft will yield immediate returns. Consequently, any missing consumer data today could quickly flip the script back to a risk-off environment. Technical analysis. Key levels to watch. The S500 is currently trading in a medium-term rising channel, but technical indicators like the risk relative strength index are showing a bearish divergence. suggesting the recent rally might be overextended. 1. Resistance levels the ceiling. $7, $002, $7, $010 immediate resistance. This represents the current all-time high zone. A clean breakout and hourly close above this level could trigger a short squeeze toward the next psychological target of $7, $100, $7, $138 major extension. Technical analysts are eyeing the $1.382 per $1 Fibonacci extension as the next medium-term stop if the bullish momentum holds. 2. Support levels the floor. $6, $934 pivot support. This was the previous monthly open and now acts as the first line of defense for the bulls. $6, $900 psychological support. This is a critical level. If the S500 breaks below $6, $900, it invalidates the recent two-day recovery and opens the door to a deeper correction. $6, $704 bullish invalidation. A daily close below this level would suggest that the uptrend has stalled and a significant market top may be in place. Economic catalyst. Today's make or break data. The retail sales data released today is the headline act. The bull case. If sales exceed the 50 cents per cent dollar forecast, it proves the US consumer is still spending despite higher interest rates. This would likely push the S500 toward $7.050. The bear case. A miss below 20 cents per cent dollar would revive recession fears, especially with the unemployment rate sitting at $4.40 per cent dollar. In this scenario, expect a retreat to the $6.880 area. Trading strategy for today. If you are looking at the S500 today, the wait-and-see approach during the first hour of the New York Open is often the safest. For scalpers, look for long entries if the price holds above $6.970 after the retail sales release, targeting $7.000. For swing traders, the risk-to-reward ratio is currently skewed. Unless we get a weekly close above $7.005, the probability of a double top formation remains high. Risk management. Volatility is expected to cluster. Ensure stop losses are placed below the $6.900 handle to protect against a flush if the macro data disappoints. Summary forecast. The S500 is in a buy the dip phase, but the dip buyers are getting exhausted. Expect a choppy session with a slight bullish bias, provided the $6.934 support holds. However, with the key consumer price index and the delayed jobs report arriving later this week, today is merely the opening act of a very volatile play.